What's up, money lovers? Welcome back. My name's Vinny. Hope you're all having a great day out there. Wanted to give you guys some quick breaking news we got here. Amazon has just announced a 20-for-1 stock split and a $10 billion share buyback program. So this follows after Google not so long ago announced the same thing, a 20-to-1 stock split as well. So the board of directors just approved it on Wednesday today. And the company's also buying back 10 billion of shares. Now, this is their first stock split since the dot-com boom. And if you own Amazon, you'll receive 20 shares for each share that you currently own. And the stock is obviously reacting positively to this news, up 7% in after hours. So while stock splits don't change anything fundamentally about the company, they definitely have a very real psychological effect. You will see lots of new money start to pour into Amazon because people see a $100 share and it looks a lot more affordable than a $3,000 share. And there's just something nice about owning one full share than, owning 0.08 of an Amazon share for the same amount. We know that it's the same fundamental value, but stock splits over time, I think, do push stocks up as it gets people excited. It gets more retail traders into the stock where they otherwise would not have purchased the share, obviously at $3,000. If the split were to happen today, it would go from $2,785 a share to about $139 a share. And as we said, Amazon's joining many of the other high value tech companies that have also announced split as of late. Google announced a 21 split back in February. I bought Google stock after they announced that split, and I am down a little bit. It didn't turn out to be very good timing in the short term, but it was, it's a stock that's been on my watch list for a long time, and this was just kind of like the final bonus I saw. There's a lot of reasons I wanted to own Google. I talked about them in my video on Google. You can check that out on the channel. In 2020, Apple had a 4-to-1 split. Tesla had a 5-to-1 split. And, people have been talking about an Amazon stock split for a very long time. I think it makes sense. And this comes as the new CEO, Andy Jassy, who was formerly head of Amazon's AWS segment, has faced a rough start to his tenure here. The stock has been the worst performer among big tech companies this past year. It's dropped 16% so far in 2022. I think mostly just due to a big decline across the whole tech sector. Obviously, with everything going on in the world, it's not been a good time for stocks, and especially not growth stocks. They also just reported their slowest growth rate. Billionaire activist investor Dan Loeb, who's been adding to his Amazon holdings, told investors in a private call that he sees about $1 trillion in untapped value at the company. So I think Amazon's definitely a great company. And if we just take a look at this chart here, Amazon is at war with everyone. They're competing in just about every industry you can think of. They've got their cloud storage division with AWS. They've got game streaming. They've got Amazon Pay, logistics services, audiobooks with Audible, smart speakers, Amazon Prime, obviously. And Prime is not only a streaming service, but a subscription service that Amazon generates so much revenue from. They just increased their Prime membership cost from $119 to $139 annually, or if you pay monthly, from $13 to $15 a month. And, just an incremental increase like that is going to add billions of dollars to the bottom line. If we just take a look at, a breakdown of Amazon's different revenue segments here, the online stores do bring in the majority of their revenue, but they are increasingly diversifying. And we've got these other segments now where, physical stores, their online stores brought in 222 billion, but physical stores brought in 17 billion of revenue in 2021. Third-party seller subscription services brought in 103 billion. Subscription services 31 billion. AWS, this is the part of the business that is probably the most exciting and growing the fastest moving forward, brought in 62 billion. If we compare that year over year, it was 45 billion in 2020 for AWS and 35 billion in 2019. So that segment of the business should continue to fuel a lot of Amazon's future growth. But overall, I think all of these segments will continue to grow. They're not going to grow exponentially. It is a business in its mature phase here, with the exception of maybe AWS. But the other segments will only continue to grow. Profit margins should, increase as they have such a vast economy of scale. I mean, it's a company that operates internationally. Obviously, their North American sales bring in the bulk of the revenue at 280 billion, but the international sales is 127 billion. Very significant number there, and year over year, again, there's the growth. International sales went from 104 billion to 127 billion. US sales from 236 billion, or North American sales, I should say, sorry, from 236 billion in 2020 to 279 billion, almost 280 billion in 2021. So considering the size, they are still growing at a rapid pace. It will be interesting to see in 2022 here, as things somewhat return to normalcy. Maybe people will do a little bit more shopping in the physical world, but who knows? I mean, Amazon has definitely cemented itself as a staple in society, not going anywhere. And I think you continue to see steady, significant growth coming from the AWS segment. So let me know what you guys think of Amazon in the comments below. Are you going to buy? Do you own Amazon stock? Why not? I do not own Amazon besides through my index fund investments where, it's a top 10 S&P 500 company. But other than that, I don't plan to start a position in Amazon. But let me know what you guys think in the comments below. Thanks for watching. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.